Hello everybody, how we doing this afternoon, traders? So here is the first and my introduction to my YouTube channel at Ryan Trades. And the goal of this channel is just going to be to provide you accurate information, accurate market levels, areas where I believe that the market is going to show major confluence, areas in the market where I believe that there's going to be either a lot of sellers, buyers, or maybe even just consolidation. And just give you my 2 cents on the market. Now, if you find anything in this video helpful, please consider liking and subscribing. It'll be greatly appreciated, and I won't waste any more of your guys' time, so let's get right on into it. So, S&P, been having a lot of selling lately. Bears are in control of the market, I would say. That 433 level broke down, so I would definitely say that Bears are in control. If that 433 level end up holding, then I would have maybe considered being okay. We might just get a lower high. It was a symmetrical triangle. We could have moved upward, but we kind of broke below that symmetrical triangle now, and I'm favoring a little bit more downside. But as always, I like to stay neutral in my bias in the market. I don't like to be bullish or bearish. I just trade what the price action tells me. Now, these yellow lines that you see on here are Fibonacci levels I drew on the weekly chart. I took let's see, what was this? The that's March 13th low. That weekly low to the recent high here. Got a 38.2% retracement. Now, normally I don't use the 38.2% retracement on the weekly time frame just because usually it's a low probability fib. It just happened to be that there's a lot of confluence around the 38.2 this time, so that's why I decided to kind of go along with it this time. But you can see right here that I also drew the fibs from this high here to this high here to the current low right there. Now, an interesting thing to keep in mind is these fibs are not always, if price comes to them, sometimes they're good, sometimes they're not. Sometimes the market will react to them, sometimes they won't. It just really depends. And that's why it's very important to confirm your trades before you enter them. Because if you don't have the price action or the volume on your side, you don't want to get into the trade because obviously then it wouldn't be a high probability setup. But let's go and look on the weekly. I'm not weekly. Let's look on the daily charts of what we got here. So as you can see today, we opened at, what was it? 429.17, and for the most part we pushed up. Now you can see here that 38.2 at 429.34 really held as a solid support zone. Now, there are some people out there that saying this is a dead cat bounce, which there is a possibility it can be. Volume is a little bit on the lower side, so it could possibly be a dead cat bounce. Now, what I think is more likely is you see this big gap right here. I think what's more likely is that maybe this week up until Thursday and Friday, we might get movement to the upside to 438. And then what you're going to either get is a complete dump of 438 and it's going to move downward, or you might get 433 to end up holding support, and this could just have been a false breakdown. No one really knows what's going to happen next, but that's just what I see as a possibility happening. But at least for tomorrow, the major levels I'm going to be watching is to see if 429 holds. If 429 holds, then I'm going to be favoring a little bit more upside in the coming days. And as you can see here, you get a nice bounce off the 429 level. Now, obviously, in today's price action, it's a very good example of it. Of what I was talking about earlier, you gotta always make sure you confirm your trades, because as you can see here, we were below it, we went below it, but did a false breakdown and went up. That's why I typically don't trade the daily or the weekly fib zones I draw out. What I typically would like to do with these levels is just watch them for possible moves to the upside or possible moves to the downside. So in a more simplified way, I'm not going to be looking for calls as long as the market's in this area. Because as you can see here, every time the market hit it today, bounce, bounce, very big bounce. Came back down to this area, but it never broke it. Just a very, very strong support zone. It'd be very stupid to be doing calls in this area, and I'll admit I used to do it all the time. I used to take, I mean not calls. It'd be very stupid to do puts in these type of areas where you got major support. And I have to admit, I used to take puts all the time near major support areas. It's everybody does it now. So just make sure you watch that for tomorrow. If 429 holds and stays steady, then use it as a good area as support. Now, if we start skyrocketing to the upside here, watch 438.43 for that gap fill setup. Now, I don't have a strategy yet on gap fills. I plan on doing that after I master my Fibonacci strategy. Now, I'm gonna go over the trade that I took earlier today. Wasn't a bad trade at all, but let's just get into that gap fill idea. So yeah, like I was mentioning earlier, the market could come up here, fill the gap, then dump, or it could fill the gap to proceed even higher. Not really telling what's going to happen, but just an idea, something to watch out. Now, let's go over to the trade that I wanted to go over for today. Now, I ended up taking two trades today. I went into the market today thinking, as you can see here, I was watching the pre-market. What you get here is lower high, lower low, lower high, a little bit of I would call it more of a bounce, not really a pivot zone, but then you get a lower low, then you get a lower high, lower low. So as you can tell, bearish market structure, plus you broke a major fib. I was favoring a lot of downside today. Markets opened up. I end up trying to, what was it? I try to go short right here. Now I figured, okay, we got a big move off of this. So I was going to try to short one of these wicks to get a move to the downside of 429.34 as the price target. Now, I believe the trade that I took, let's see if I can find it. And what we'll do is, just because this is a lower time frame, we're just going to change those to purple now and make it easier for you guys to see. Now, I think it was, where was it? Yeah, so it was right here. So this candle right here, the high of this candle was 430.29. It crossed the fib at one point, as you can obviously see. Volume wasn't all the way there, so what I end up doing is I end up just waiting for one candle because I like to have the volume confirmed on the 1 minute, price action confirmed on the 5 minute. So you see here we formed a hammer, which a hammer candle can also be usually a big sign of a reversal. Now I don't blindly take the trades on the 1 minute. What I do is I wait for the 5 minute and the 1 minute to confirm the trade. Now it closed here at 70. That's not right. At 430.21. That's exactly where the 50% fib is. Very high probability area for it to get knocked down at. Now, what I end up doing is I shorted it here. I set my stop loss for 20 cents. I believe I set my stop for, where was it? From this point. Yeah, so I set my stop right here. So about 2 candles-ish later, I end up stopping out of the trade. Took let's see if my memory serves correct. I believe it was a 4% loss, considering that I'm also trading a small account of 3,200 and that I'm also at the same time just taking small position sizes until I get my consistency down. Because I'm not yet a profitable trader. I'm still on the way to get there. But yeah, so I ended up taking a 4% stop loss on that. I believe it was a $190 position, roughly. And went short, stopped out. Okay, I was wrong. Move on, find the next trade. Just the way I always think. So I just waited for the next probability. Now I see here, I finally came to the realization that you're starting to get some bullish market structure, higher highs, higher lows, and it's breaking down the bearish market structure here. So I'm looking for the bullish market structure to turn, and it did. it ended up into a big rally. Now the other position I took was at the bottom of this candle. I went long here thinking, okay, maybe my bearish thesis was wrong. And that's a very important part of being a trader is you got to admit when you're wrong. Maybe I'm wrong. We're near a major support fib. Why not go long? Let's try going long. So I ended up getting to 430 calls at that area. I believe I drew the retracements from here to... Yeah, I think I drew it from down here, as a matter of fact. Yeah, that's what it was. So the high was for what? 430.76. So yeah, on this, I ended up... Let's change to 38 purple. Now, as you see here on the 5-minute chart, price action came down to the level, bounced above it. You have above average volume. So the 5-minute confirmed the price action. And then if we go to the 1-minute chart, that would be this candle right here. You get I call it a hammer candle doji. It's not really a hammer candle, it's just a doji of some sort. So I end up going long on this candle here, bought here. Now, if I was using my scalping strategy, I would have set my price target to like this general area. Probably like right here is where I would normally set my, or, matter of fact, realistically, I would have probably set it here. Realistically, I would have set my price target here. We've gotten out of the trade there. Nice risk to reward. You would have gotten a 81-cent move compared to a 20-cent downside, which I would have gotten out of the trade here if it just didn't work. Now, that would have been an absolutely beautiful trade. Unfortunately, I ended up stopping out like right over here at break even. I thought it was going to be a higher high to precede this. I thought this was going to be the bottom of a lower high, and I thought we were going to rally for the rest of the day. Obviously, I was disappointed. In a perfect world, that wasn't going to work, but, worth a shot, worth the risk. If you have good risk management, it's usually worth the risk. You just got to make sure you stay within your rules, don't overtrade, and you're just smart about everything. Yeah, so those are the levels I'm watching for tomorrow at least. Those were the 2 trades I ended up taking today, and I look forward to seeing you guys tomorrow. And please consider liking, subscribing, leave a comment if you found any of this useful.